Welcome to Everyday Money Matters, where we explore practical tips on saving and making money in your daily life. Get ready to embark on a journey towards financial empowerment and smart choices. Subscribe now and let's make every day count for your wallet. In today's video, we will discuss credit invisibility, what it means, and how it affects you. Now let's get to it. Credit scores operate on a scale of 300 to 850. The better your credit score, the easier and cheaper it is to borrow money. While a bad credit score can hamper your borrowing efforts, having no credit can shut you out entirely. Credit scores set the terms for some of the most important financial decisions in your life, such as buying a car or a house. Even an apartment rental application can hinge on your credit score. Yet a TransUnion survey found that 45 million American consumers are considered credit underserved or unserved. Being credit invisible is exactly what it sounds like. You're invisible to the credit system. It means that you don't have any credit record, good or bad, because you've had little or no opportunity to use credit. You go to a bank, mortgage lender, or credit card company to apply for a loan and find out that there is little information about you. There's no payment history, current or prior auto loans, credit cards, student loans, or other forms of debt listed from any of the 3 credit reporting bureaus, Experian, TransUnion, or Equifax. As a result, your application is denied because your ability to repay loans cannot be determined. As home buying is a key component of wealth building, credit invisibility can severely affect your ability to achieve your financial goals and build generational wealth. However, the effects of credit invisibility extend beyond the credit space. For example, your credit score, or lack thereof, can affect how much your insurance costs. It can also affect the result of an apartment rental application. According to research conducted, 19% of Americans are credit invisible. A disproportionate number of credit invisible consumers are Black or Hispanic. They're 1.8 times more likely to not have a credit score. Research also shows that 26% of Hispanic consumers and 28% of Black consumers are credit invisible or unscorable, compared to 16% of white and Asian consumers. Even Black and Hispanic consumers with credit scores are still 1.9 times more likely to have a subprime credit score. 40% of Black consumers and 29% of Hispanic consumers have subprime credit, compared to 20% of white consumers and 11% of Asian consumers. Additionally, while credit score calculations aren't necessarily tied to your income, the two are correlated. 30% of consumers in low-income neighborhoods are credit invisible, and 16% of them are unscorable. In comparison, 4% of consumers in high-income neighborhoods are credit invisible, and 5% of those consumers are unscorable. What causes credit invisibility? There isn't one reason why a person has a credit profile that renders them credit invisible. In the simplest cases, someone might not have had any reason to borrow money, so they never had a reason to use credit. Similarly, a younger consumer may simply not have had the opportunity to build credit within the period of time they've been eligible to apply for a loan. How to become credit visible? To get credit, one must already have a credit history, but to gain that credit history, one must already have credit. To break this catch-22 and become credit visible, you need to find a way to get your foot in the door. Start small and slow. Research suggests signing on as an authorized user on someone else's credit to start, which is often the easiest way to build credit. Becoming an authorized user will grant you a credit card. The original cardholder will be responsible for any charges you make on this card. However, this requires you to know someone who will be willing to add you to their card, which isn't accessible to everyone. There is also an abundance of credit-building products that you can qualify for without prior credit. Certain banks offer secured credit cards with low spending limits but often come with high interest rates. Finally, many local banks and credit unions also offer free workshops on various financial topics, including ones on building credit. Building a relationship with your financial institution requires asking questions, understanding and following the rules. If you found this video helpful, give it a thumbs up, and share it with anyone who might benefit, and don't forget to subscribe. Thanks for watching, see you in the next video.